Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and we're getting through the week slowly but surely. I'm going to talk a little bit about Nvidia today, a bit of macro, a bit of Bitcoin as always, and then I'm going to put a little bit more focus on the charts because I think the chart read I've got on the stock market at least is very, very clear. I think we've got a very well-defined if-then times two, one for the bullish and one for the bearish. So I'm going to show you that. First of all, okay, I saw this yesterday, I couldn't stop laughing. Nvidia is now a macro event, okay? Which is just hilarious, but it's so true. It's so true at the same time because Nvidia makes up such a huge portion of the indexes. So it really is starting to function now like a macro event. Nvidia crushed earnings yet again. They beat EPS, okay? They beat revenue and announced a $50 billion buyback. So happy days, I guess, so far under the hood for Nvidia. A couple of things that were a little bit concerning to me about this is that, did you know people were organizing a real life watch party for the Nvidia earnings, okay? So what part of the cycle is this? And this is dead serious. People were treating this like a Super Bowl event. They were going to places that they'd specifically hired out so that, in fact, I've got a video here for you. So here they are, right? Sat in a bar having a drink, waiting for the Nvidia earnings to be released. And I mean, this is like mega top signal from my perspective. And that, let's be clear, that's not me saying that, you know, we're gonna top today or tomorrow or the top's already in. Okay, as ever, we'll take it one day at a time. But if, let's say, in 6 months or 12 months' time, we are deep into a recession and a bear market, I think we'll be able to look back at this and say, well, of course, right? Of course, the memes are writing themselves at this point. So far, Nvidia actually made it down as much as about 8% after hours. I saw it down somewhere around 115, 116 at the lowest point. Looks like we are going to be somewhere lower, but not too significantly. So the big question is, you know, is this going to turn into a quick spill? Or are we somehow going to be able to sort of chop around and continue higher? I'll save the charts, like I said, for the end of the video. I want to go over the stock market because I think the read is pretty clear there for me. But I will say this, notice how, okay, technical analysis is actually superior. And the reason I say this is because my background originally was of somebody that used to read every single company balance sheet, look for value, try to find underpriced stocks relative to the company assets and projected forward revenue and all of this kind of stuff. And the reason I ended up jacking all of that in and just using a couple of trend lines is because the reality is the cycles are in control. The trend lines tell you when the market is breaking out or breaking down, and everything else is just narrative and at the mercy of the charts. And I think, you know, if we end up seeing Nvidia beat earnings like we have, and yet the market continues to spill, then the market, the participants in aggregate, will just invent a narrative to explain away the price. And it will be something akin to, well, it's because everyone was expecting this growth to continue. And of course, at some point, it's got to slow. And I think people were just a little bit over ambitious, right? Whatever it is, they'll invent a BS narrative here to explain away the price action. And inversely, or conversely, I should say, if what we see is this turn into a breakout, retest, resumption, and Nvidia screams off to new all-time highs, then the market will attribute that to, well, they beat earnings again, okay? They're unstoppable. They're an absolute gem of a company. And all of that may or may not be true, but the facts are the facts, the data is the data, and the charts do not lie, okay? If this completes breakout, retest, resumption, then we have a trade set up with a clear invalidation based on one silly ultra left curve trend line. Okay, and similarly, if we fail this breakout by closing below it, okay, then of course we'll be looking for a breakdown to occur at this second angle. And it is in here that you've got a clear short setup with a clear invalidation as well. And all of that narrative, all of the people that go to these parties, all of the people that try to explain away the data or look out to forward earnings and calculate the PE and all of that kind of BS, okay, again, you can get outperformed by a dumbass camel on the internet that draws a couple of trend lines on a chart, okay? So as ever, I sit here and continue to be a proponent of TA is king and everything else is a waste of time and energy. Of course, you do you, okay? You do you. I'm by no means saying that I'm right and everyone else is wrong. So, continuation of wild times ahead. Speaking of macro data, okay, after the Nvidia macro data was released, tomorrow we've got PCE data. which is the Fed's preferred inflation metric. I think it prefers it just because it's a lot less susceptible to volatility. It bounces around a lot less than things like PPI or CPI, for example. But notice how I said earlier, okay, the charts are the truth. The charts don't lie. And more importantly, cycles are in control. Now, on Friday, when the PCE data is due to be released, it just so happens to coincide with a perfect half-cycle low for the stock market, which to me begs the question, doesn't it? Do we get the standard half-cycle low shakeout into Friday? Okay, and does that result in seeing a lower PCE print, okay, signaling to the market that inflation is not as sticky as most people seem to think it is? And does that send us straight out of a half-cycle low into the remainder of the bullish cycle? I would think it probably does. I am indeed looking for a cold print and a rally. Anyone that's been following me for a while knows we are expecting some cold prints. And of course, the inverse is true, right? If we see hot prints, which is not my base case, but of course, it wouldn't be the first time I'd ever got an inflation read wrong. If indeed we do get a hot print, then we might even have to entertain major tops being in, which is kind of wild. But realistically, if we get a hot print and a big sell-off, okay, and the half-cycle low fails to hold, or we get some kind of counter trend bounce out of here that then resolves to the downside, then what we've got, objectively speaking, is a breakdown of the second angle, okay, a breakout temporarily that rolls over and fails, and the subtle tell from the market would have been there the whole time because there's a high and there's a slightly lower high. So for us to be bullish here, we really do need to see that half cycle low resolve to a new all-time high. I think that's probably going to happen. Anyway, I'm already kind of doing the charts. I wanted to save that to the end. But as I'm sure you'll be well aware by now, if you've been following this channel for any length of time at all, okay, it is really surprising how often these cycle lows or half cycle lows line up with key macro data events. And again, the market loves to explain away the price action, but it is the cycles that are in control. Speaking of bearish implications in the charts, okay, the 10-year, 2-year yield curve has just hit zero. Look at this. Okay, if you know, you know, and if you don't know, the yield curve inversion is not something that people generally should care about. A lot of people get it wrong. The moment the thing inverts, people start calling recessions or saying, well, that's it, a recession should be here within 12 to 18 months on average. But the yield curve inverting is actually kind of meaningless. What is significant is the reversion and crossing back above the zero line. That has a very, very, very strong correlation to seeing recessions unfold very shortly thereafter. Something else I'll add in here, okay, it's the 10-year, 3-month yield curve that I think is the yield curve to be focusing on, and that, as it stands, is not about to cross back above zero just yet. That will take a little bit longer to occur. But the fact that 10-2 has done it tells me the 10-3-month is about to do it in the not too distant future as well. And of course, that is synonymous with recessions. Again, there's a whole heap of people out here saying, well, what about rate cuts? What about this? What about that? Well, every rate cut we have with the yield curve inverted and then reverting above the zero line leads to a recession. So you're on the wrong side of the trade, in my humble opinion, if you think we're going to avoid a recession and continue up. These signals continue to play out in real time. We continue to follow them, and they continue to just tell me more and more that indeed we are on the right side of this call, and there is going to be a recession very, very soon. Speaking of yield curves, the 2-year, 30-year yield curve is about to uninvert as well. It's about to revert back above the zero line. Take a look at that. Okay, why is that significant? Because the last couple of times we saw this, it led to big rip-roaring bear markets and recessions. So is this time different? I don't think so personally. One day at a time as always. And here's yet another US recession signal, which I think is actually pretty interesting, okay? The white line, which I'm going to show you in a minute, is unemployment, and the orange is the difference between the share of consumer confidence survey respondents saying jobs are plentiful versus hard to get. So if you ask these consumers, okay, do you think jobs are A, plentiful, or B, difficult to get right now, and then you chart their responses, okay, what you'll notice in orange is we've got the breakout following the unemployment, okay? This tells you essentially that more and more people are starting to find that jobs are hard to get. They're not actually plentiful. It's not easy to get hired at the moment. And notice, okay, again, the prior times we saw this, what happened? We saw recessions, of course, and big bear markets for the stock market. So once again, you need a lot to change if you're in this camp of people that says, Camel, every year there's someone that calls a recession, they never show up, or blah, blah, blah. Okay, you need a lot to change right now, if indeed we are going to avoid this recession as ever, one day at a time. And there is nothing in the laws of the universe that says this couldn't quickly morph into this. Okay, and if so, we might be able to swerve it. But for now, I continue to sit here and say the base case hypothesis seems to be in play. So what does this mean for Bitcoin? And the simple answer is absolutely nobody knows. But I do wonder if we could see some kind of catalyst. The more I look at the chart, the more I see it consolidate, the more I tend to think that something is going to have to happen to force that fear-driven fifth wave. And I do wonder if it could be this? What if we see, and I'm not saying Bank of America will collapse, I'm not saying that at all, but what I'm saying is, what if we see some kind of big bank failure? That would certainly drive a fear-driven fifth wave, right? And it seems to me that something has got to break, or something's got to go bang, or something has got to force people to say, oh my goodness, get me out of the banking system, get me out of fiat, and get me into Bitcoin. I don't care what the price is. That is, of course, the characteristics that we are looking for in a fear-driven fifth wave for Bitcoin. Warren Buffett has just sold a whole heap of Bank of America shares. And again, I'm not suggesting for 1 minute that Bank of America is going to collapse. I have absolutely no idea. But what I am saying is, if you can imagine a scenario where we get some huge bank collapse, something of the size of Bank of America, I would imagine Bitcoin will do very, very well. It has a good track record historically of rallying in the face of bank collapses. And it might not be this at all, okay? It might be something completely different. But again, remember that very, very old saying, show me the charts and I'll tell you the news. The charts say, okay, we've been consolidating for a very long time, okay? The bulls are wrong, the bears are wrong, everyone's wrong because we're just kind of ranging, just bouncing around like this for sideways, wearing everyone out. So something's got to happen to make everyone decide, okay, there's only one way to go from here. And I do wonder what exactly it has to be to force a direction. In the more short to medium term, okay, just keep Bitcoin very simple. All the while we're kind of holding above the prior closes at the all-time high levels, somewhere around 55 to 60K, let's say, then so far so good. Breakout, retest, possible resumption. Start to close monthly candles below here, okay, and we are probably in for a world of trouble. For now though, all the while it's above, seems like it's malpractice to be bearish. And so far this current cycle looks very, very, very similar to cycle 2. Okay, we've got a lot of parallels. So far, we're actually right on schedule. And again, it still tells us to keep an open mind about seeing a squeeze higher. So you can pause your screen and zoom in on this, take a good look if you want to examine that. And something else that is in our favor for seeing higher Bitcoin prices is that Bitcoin should already be at 80K right now, according to the Bitcoin and the high yield growth ETF. So Bitcoin is in orange and black is HYG. And you can see they're very, very, very strongly correlated. Of late, we've got a divergence. Notice how high yield's breaking out to the upside whilst Bitcoin is yet to play catch up. And Timothy here is speculating that the reason for that is because this lady, who is classically known for being out here in these streets, overtook DT in the national polls. So I don't really know how much of this makes a lot of sense to me. I don't know if that's the case. One thing I do know, again, is the charts are the truth and everyone else will just invent narratives to explain away price. One thing I think we should focus on though is, historically speaking, as you can see from this correlation back here, okay, one tends to follow and track the other. We had a divergence where Bitcoin went up way ahead of schedule. That's why the orange here is such a large gap away from the black. They've since then come together. Okay, and now it looks like high yields are telling us to expect higher Bitcoin prices. So had we have stayed on track with the black, we would be at 80K right now already. And if you want to purchase this, it's not an endorsement. I haven't purchased it, but you can go over here and purchase this article from Timothy where he uses HYG to indicate that Bitcoin should be over 100K within 3 months. Assuming, of course, this doesn't completely break. And what we don't see is the black scream off and Bitcoin just continue to do this. So can you wait 3 months for 100K? So far, Bitcoin still doing a whole heap of nothing, right? Potentially holding a cycle low. I do wonder if we're going to see another flush and this not be an inversion. I do wonder if we've got something akin to this coming in the not too distant future. For now, though, we'll continue to push and see what happens. I'm noticing gold refusing to give a cycle low as well. And silver thinking about trying to attack that breakout level. So it should be a nice, interesting close to the week there. For the stock market, I think the read is pretty clear at the moment, okay? We know we've got a half cycle low due tomorrow or perhaps even Monday at the latest. We know we've got that PCE data tomorrow, which should be lower and thus catalyze further upside. We also know that right now we're barely clinging on to the second angle. So if this is a true fake down, then we need a hold above it, right? And if we don't, then we've got a fake down to the downside, a hard retest, possible resumption lower. That would not be an ideal situation. Something else I wanted to point out is we've got this gap right here. Okay, so I do wonder if we need to come back and fill that briefly and then we can go. If we do, then we can potentially talk about me adding some S&P exposure. But the key part here is, so far we have made a lower high, okay, which is the biggest and easiest to spot tell from the market that if we don't change the structure, okay, then we have very, very bearish implications. So here's how I'm looking at it, okay. Any kind of backfill of this gap and immediate reversal is absolutely fine by me. Any kind of 1 or 2 day decline into a half cycle low followed by a rip is also absolutely fine by me. But any kind of decline from here, failure to make a new high above this high, and here's the key, the prior all-time high followed by some kind of resumption, is me saying, oh no, okay, things are blowing up, bear markets are coming, and this is me starting to call tops here. I really don't see a scenario where we do this and everything is fine. If we really are going to set a third and final blow off top angle, then the thing needs to show up and start to look blow off toppy very, very quickly. So as ever, I remain cautiously optimistic. Right now, there's no reason to be bearish, okay? Like I said, a little bit of a half cycle low shakeout and then a rip, and everything is long and strong. Third angles will be set off of that half cycle low and breakdowns will be sold, as has been the plan for some time. On the NASDAQ, we are still following our LARP fractal to the tick as it stands. I'll move this out of the way so we can see what's going on. As you can see, objectively speaking, we're looking to set that third angle. We have breakout, retest, resumption of the blue, and we have a perfect back test of the second angle so far. So similarly, the NASDAQ, super clear and easy read, okay? If this is breakout, retest, resumption of the blue whilst holding the second angle, then happy days, long and strong, looking for third angles to come in line with the LARP fractal. However, similarly to the S&P, if we make some kind of half cycle low, fail to take out this high, don't come out and take out the prior high here, start to roll over, start to hold below the breakout level, start to close below the second angle, okay, then this is me saying, well, we're clearly not doing a blow off top anymore. We're clearly in a bearish structure and things are going to get painful before they get easier. For now, I see no reason why we have to top. I see no reason why we have to be bearish, okay, until the chart proves that to me. So I still kind of stick with this LARP fractal idea of mine. I still think that we are going to see breakout, retest, resumption and look to be selling higher up. But like I said, the read is pretty clear, right? If support's going to hold, then it's going to hold. And if the half cycle low is going to show up in the next couple of days, then we really need to see it not only clear this high, but this high too. Otherwise, we haven't really got bullish structure. We've got a lower high and looking for a rollover. So it's pretty simple. Shouldn't be too difficult to deal with, at least over the coming couple of sessions. Similarly for the Dow Jones, right? Breakout, retest, possible resumption, looking to set a third angle and commit to it out of this half cycle low. Okay, and similarly, if that really is breakout, retest, resumption, then by the end of the week, you know, we should have found a half cycle low and be screaming up. Okay, that should be what the chart looks like going into next week. If we don't get that, then again, we've just kind of double topped, looking to roll over, looking to lose major supports, second angles and all of that stuff. And that, of course, is very, very bearish. So it's a nice, simple way to handle this for all of the stock markets. Half cycle low and go, or we're in trouble. VIX is looking encouraging. Looks like it wants to get crushed on Friday. Of course, Friday will be VIX Crush Friday again. So crush into next week, start to get some exposure to the VIX. Nice tight stop, hopefully, if we can get a nice big red candle down here. And then we'll be protected in case the worst should happen or something should break. Don't think I've looked at the Russell 2K for a few days, but here it is. Okay, not really doing anything too exciting. Long and strong continue to push there. Stops choked up. Dollar, I've just labeled this as a daily cycle low. I think we've probably got one final chance here to do something like this and then into that 3-year cycle low. If not, then maybe that was it. Time will tell. I don't want to go making any big commitments to 3-year cycle lows just yet. We'll let a little bit more price action play out. I would think if we start to repair out of here though, then we might have had it confirmed. So we'll be keeping an eye on that. Otherwise, what else is there to say? What a wild time to be alive. Look out for that PCE data tomorrow. Of course, if you're part of the Camel Crew, then we should be expecting lower and colder prints. But as ever, you know, we can get short-term wobbles, or I could just be wrong. We're going to find out tomorrow anyway. Other than that, I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.